Sawadika. A very warm welcome to the Q2 earnings call of PTL. We will talk about the company overview, the quarter under review, some of our key success enablers, stability in our earnings, industry outlook, and the growth capex that we are having. So talking about the company overview for some of the new joinees here. Polyplex is one of the largest producers of thin BOPET films in the world. Globally, we rank number 2, excluding China, and in Southeast Asia, we are one of the largest producers. With 7 manufacturing plants at a group level, we have manufacturing operations in all key geographies and demand centers, which is Americas, Europe, India, and East Asia. And we are probably one of the most integrated producers of PET films, with upstream integration into manufacturing our own resins, downstream integration into producing a variety of coated films, and side stream integration producing variety of base films, thereby delivering one of the widest product portfolios in this industry across a host of applications in the packaging as well as industrial segment. Moving on to the financial performance for this quarter. Q2, we have been able to deliver an EBITDA of baht 1.2 billion, and on a YTD basis for the half year, 2.5 billion. Q2 has been weaker in comparison to the previous quarters due to some pressure that we have been seeing on pricing as well as on margins, arising mainly from new capacity startups in China and in India, and also from the destocking impact which we are witnessing, which has actually slowed down the demand in certain key markets. At Polyplex, we have been able to work on increasing our volumes, both on standard as well as specialty films. So this has, to a certain extent, helped us to counter or partially offset the impact of declining margins in this quarter. Moving on, here is a trend of the quarter-on-quarter and the year-on-year growth that we have seen in Q2. So as explained earlier, while volumes and revenue have grown, we have seen a dip in the EBITDA margin, as well as the earning per share due to the market factors that I just explained. This is an EBITDA bridge chart, basically to show the movement from Q1 to Q2. So as you can clearly see, we have gained from improving volumes, but this has been offset by lower value addition rate variance and also higher fixed costs. Increase in fixed overheads has been mainly in stores and spares expenses due to some plant maintenance and upkeep expenses. Moving on to our success enablers, we would just like to share with you on some of the key attributes of our business model, which we believe has helped us in improving our positioning in this industry over the years and be successful. We are probably the only player combining several such key attributes, like globally and fully integrated manufacturing setup, a geographically well-diversified sales and distribution network, a wide product portfolio with a high share of specialty products, with a continued focus on operational and cost efficiencies, as well as focus on ESG. Now let's look at each of these attributes a little more in detail. Talking about global operations, so if you look at our global footprint map, you would note that one of our key strengths is from our presence in almost all the key markets, key geographies, and demand centers across the globe. Either we are present through a manufacturing full-fledged setup, or in areas where we are not able to be present through a manufacturing setup, we have complemented it with presence through a trading office setup or a sales and distribution setup, agent representation, rep office, liaison offices, etc. And this has, over the years, helped us to grow our customer base and diversify it globally to currently over 2,600 customers at a group level. Moving on to the industry value chain, as you can see the highlighted portion, that's the area in which Polyplex entities operate. And we believe that this area is a specialty part of the entire value chain, and it's quite differentiated in this regard compared to the rest of the value chain. So we have fully integrated manufacturing at all our locations, with upstream integration into resin manufacture, as well as downstream integration into a variety of coated films. Talking about some of the benefits that a fully integrated operation has. So backward integration at all locations into, producing our own resins not only helps us to control or maintain consistency in the quality of our resin and film, but also helps us to have possibility of merchandising surplus resin capacity. It also helps us to develop new products and also gives us a chance to optimize on cost through direct melt casting for energy savings as well as for improvement in the quality of the film. Forward integration, which again is present at all locations, helps us to diversify our product portfolio, expand our product portfolio, customize innovative solutions for our customers, and thereby help us in market and customer penetration. And expansion of specialty portfolio helps us to also improve our margins. Talking about specialty portfolio, internally the terminology that we use for our specialty film segment is called DPAC, which is basically D stands for differentiated. Differentiated, it could be differentiated product, differentiated application, or differentiated customer. So when we talk of differentiated product, it is basically a product with some special features which offer unique value proposition to our customers, and the competition in such products is also limited. Differentiated application is basically specific applications for a standard product, which are probably not well known in the market yet, and hence again provides a better value proposition for our customers. Differentiated customer is where there are significant entry barriers because of stringent quality norms or long qualification process or significant trial costs. So with all our efforts directed towards enhancing our DPAC portfolio, we have been able to grow our specialty or DPAC product portfolio over the years and deliver stable and more superior margins, which we can see in the coming slides. So this is basically a trend of how the DPAC volumes have moved and how much is the incremental EBITDA that we have been able to generate by operating or improving our focus in this segment. So having a pipeline of various new products, taking timely decisions, investments to enhance our manufacturing capability and capacity for specialty films, and also accessing difficult to serve markets or difficult to serve customers has structured in the form of year-on-year expansion of our DPAC sales volumes, as you can see from this graph, and also the incremental EBITDA from these sales. So if you look at the graph on the right side, if we have to just explain it in simple terms, had Polyplex not been operating in the specialty segment, if we had just standard films in our portfolio, our EBITDA would have been about 1.2 billion lower for the YTD period. So instead of 2.5 billion, we would have earned only 1.2 billion of EBITDA. So by operating in the specialty segment, we are able to deliver superior margins and better profitability. And especially in the current scenario that we are facing, it is only because of our strong presence in the specialty portfolio, we are able to counter or offset some of the impact of the decline in the standard film segment that we have seen. So the next key attribute is a global and well-diversified customer base. So at PTL consolidated level, we have a large customer base of approximately 2,000 customers, which is well spread across 75 countries across the globe. We have a good mix of packaging and industrial sales with diversified end-use applications across various industries. And because of this geographical diversification of customers, there is very low customer concentration risk, with top 10 customers account only for 27% of our total sales portfolio. Moving on to our next key attribute, its continued focus on operational efficiencies and costs. So even when our profitability was high, we have never lost our focus on operational efficiencies and cost structure. This has been one of the key focus areas for the management. We have been continuously working on improving our cost structure. All the new investments in Oppday films, in base films, have been planned in high productivity lines. And at the same time, we have been able to successfully repurpose or upgrade our older existing, less competitive assets for producing specialty films. Talking about the industry utilization rate and the comparison to Polyplex COF rates, as you can see from this trend of the last 5 years, Polyplex COF has always remained 100% or more due to the debottlenecking initiatives that we have taken for the existing assets, and because our lines have never stopped for want of orders. And some of the key reasons for this higher CUF of Polyplex in comparison to the industry is because of our geographical sales and distribution network, which has helped us, set up a large customer base. We have an unmatched breadth of product portfolio across various packaging and industrial applications. We are having a local presence in all the key demand centers, and in the last 2 or 3 years, we have clearly seen a shift in customer preference to local supplies over imports. And because of this geographical spread of network of markets that we have the unique ability to move materials across geographies depending on local market conditions in each of these markets. And I think that's the key reason why we have been able to deliver a near to 100% CUF as compared to an industry CUF ranging from 75 to 80%. So in 2022, as you can see, the industry CUF has actually come down. And we believe that overall it should be even lower than this because of the apparent destocking impact that we are seeing on the demand for our products. So moving on to the next attribute, which has helped us, maintain or sustain the profitable growth over the last 5 years. So be it on the volume front or in terms of EBITDA, we can see here what is the amount of growth that we've been able to achieve over the last 5 years. What is the cash flow we have generated from operations, as well as a trend of what has been our CapEx growth or CapEx investments over the last 5 years. So volume growth has mainly come from the base film capacities in BOPET and BOPP that we added in our new location in Indonesia. Apart from this, we've had smaller downstream capacity expansions in blown film, in offline coated films in Turkey as well as in Thailand. Absolute EBITDA and the EBITDA margin, we've seen a growth in them this year, especially because in Q2 there has been a dip. We are seeing a decline over the last year. But despite significant capexes, if you look at our net debt position after considering the surplus cash that we have, the cash and cash equivalent, and the investments that we have in bonds and fixed deposits, we would say that we are financially very strong and in a very comfortable position to consider any further growth opportunities. Moving on to sustainable and profitable growth. This is a snapshot of the return on capital employed, the return on equity, the earning per share. So if we see in the last 5 years, we have seen a good amount of growth. This year, we are seeing a dip because of the capacity additions, which is putting a little pressure on the margin. But we would say that our performance is relatively superior compared to the other players in the industry. Dividend per share also has been growing in line with the growth in the profitability over the last 5 years. Moving on to the next key attribute, which is our commitment to sustainable growth. So commitment to ESG is, in a sense, integrated into our company culture. We have always been and will continue to strive to create not only sustainable products, but also manufacture them through sustainable processes. Polyplex believes and understands the importance of corporate social responsibility and chooses to participate and support various initiatives to take care of the communities that we operate in various geographies. We have a high level of commitment to sustainability, which is demonstrated by alignment of our business goals with various government and industry bodies, investment into post-industrial waste and post-consumer waste recycling through our subsidiary in Thailand, EcoBlue. We focus on reduction of waste in the first place, so reduction in waste generation. We have been working on expanding our sustainable product portfolio, catering to various sustainable applications. So these are some of the initiatives that Polyplex has undertaken in the recent years on the sustainability front. So some of the examples are sustainable products which have been developed and delivered. Mono PET structure, the rPET film, where we've been able to use 100% PCR, post-consumer recycled content, to produce a PET film. These are some of the few. talking about EcoBlue, which was the first recycling initiative of Polyplex way back in 2013. EcoBlue is our subsidiary in which we own 66.5% in Thailand. So EcoBlue basically provides sustainable solutions for film-based process waste, as well as post-consumer plastic waste. And over the years since its establishment in 2013, EcoBlue has been working with PET and PO-based waste to develop high-quality recycled resins, which can basically replace virgin resin in high-end applications such as bottle, PET film, bottle, and filament yarn. And EcoBlue is the first in Thailand to produce food-grade rPET resin for bottle-grade application. So in short, we can say that EcoBlue is fully geared up to provide a recycled solution for hard-to-recycle materials and to deliver recycled PET and recycled polyolefinic resins, which can actually replace virgin resins and help the brand owners globally to meet their sustainability targets. And recently, we have had a new project commissioned at EcoBlue, which has expanded the scale of operations at EcoBlue, and it's all the more geared up to cater to the increasing need for recycled resins. So moving on, this is just a snapshot of all the prestigious awards and accolades that Polyplex has earned over the years. And the latest one is the Prime Minister's Industry Award for 2022, which we've earned for quality management. So moving on to a trend of, our margins, gross margins, and the comparison to the industry, China gross margins, and also the trend of movement of the crude oil prices. So as we had explained about the various key business attributes of Polyplex in some of the earlier slides, this has helped us to achieve relatively more stable margins and earnings compared to the industry standard China VA. So as you can see in this graph, Polyplex has been able to deliver kind of more stable margins as compared to the industry. And the second aspect to note in this is that although there is a correlation of our margins to crude oil prices in the sense that pricing of our key material, raw material, which is PTL and MEG, is no doubt linked to the crude oil prices. But as we have been stating in the past as well, it is a RM pass-through industry, and we are able to adjust our selling prices, increase it or decrease it to pass on any kind of sharp movements in the raw materials by way of film price adjustments. But it depends more on the industry scenario than on the crude oil price movement. So as we can see, the gap between the China and the Polyplex VA is the highest when the industry is going through its trough. Moving on to the outlook for the industry. So as we have been stating in the past couple of quarters as well, that there are a lot of capacity additions which are planned over the next 2 or 3 years. And majority of these new capacities are being added in low-cost developing nations like China and India. And some of the recent new lines that have been announced in China, we believe, are in the non-packaging segment with special focus on optical and high-release liner applications. So we believe that the impact of these lines on the flexible packaging segment, which is almost 70% of Polyplex sales portfolio, is focused on the flexible packaging segment. So the impact of these capacity additions in China is expected to be minimal on the flexible packaging segment. So if we exclude China, the capacity utilization of the industry is actually expected to be more steadier with lower variance in peaks and troughs. And also there could be some delays in these new capacity additions, some deferment of the lines. And also there could be some closure of older lines which are underutilized because of pressure of the competitiveness of the new lines due to changing cost dynamics or impact from COVID. So these unexpected changes could have a positive impact on the outlook of the utilization rates. So these capacity additions over the next 5 to 6 years, if we see, the CAGR is expected to be about 7%, which we believe is slightly above the demand growth rate of about 5 to 6% that we are projecting. But if we exclude China, the CAGR of the capacity additions is expected to be about 4.5%, which we believe is healthy and in line with whatever is the projected demand growth. Moving on to the growth capex. So the only large investment that is currently under implementation is the US expansion, the brownfield expansion in a BOPET film line, debottlenecking of their existing resin capacity, and a downstream offline coater. So the capex on this investment is approximately $125 million US. And there is a bit of a delay in the initially expected startup timelines. We now expect to start this line in Q1 of 24-25. But Polyplex still continues to have a high level of confidence in ramping up this line very quickly due to the well-established sales and distribution network and our strong presence in the North American market. And post this line, Polyplex in US will become the most competitive producer, most cost-effective producer. So we come to the end of our presentation, and we would like to open up the floor for questions. Thank you for your patient listening.
Okay, so I'll take the first question. So there are, I think, 4 or 5 questions within this question. So how does management foresee the spread for rest of the year? So as Suprita mentioned, we are witnessing a destocking. So our customers and brand owners, they over-ordered the material in 2021. And more or less, most of the market is overstocked, and we are seeing apparent demand being lower because of the impact of destocking. Further, we have startup of a few more lines in China and India, and very strict lockdown in COVID lockdown in China, which doesn't seem to be going away anytime soon. For these reasons, we expect the margins to remain compressed for this quarter. And moving into the next quarter, Jan to March generally is a strong quarter, but for Chinese New Year. So we should expect recovery of the margins in Jan to March quarter. October, November, December, which is running quarter, one should also bear in mind that this is a leaner quarter in most of the part of the world, given Christmas and New Year.
สำหรับคำถามแรกนะครับที่มีทางด้านของท่านนักลงทุนถามเข้ามานะครับก็คือดูว่าทางด้านของฝ่ายบริหารนะครับมองเห็นสเปรดสำหรับส่วนที่เหลือของปีนี้เป็นอย่างไรนะครับก็คือเนื่องจากผลของทางด้านของการ overstocking นะครับก็ทำให้นะครับมีความกดดันก่อทางด้านของตัวอุปสงค์นะครับของผลิตภัณฑ์และก็ทางด้านของลายต่างๆนะครับที่ยังอยู่ในประเทศจีนและก็อินเดียและผลของการล็อกดาวน์ของประเทศจีนนะครับซึ่งคาดว่าอาจจะยังมีผลอยู่นะครับก็ยังคงอยู่ก็จะมีผลนะครับทำให้ margin ก็ค่อนข้างที่จะ compress นะครับหรือได้รับการค่อนข้างที่จะกดดันไว้นะครับจะอยู่ในระดับที่ไม่สูงขึ้นและก็ในส่วนของทางด้านของไตรมาสต่อไปนะครับเชื่อว่าทางด้านของนะครับ margin ก็จะมีความแข็งแกร่งนะครับแต่อย่างไรก็แล้วแต่ในช่วงตุลาคมพฤศจิกายนถึงเดือนธันวาคมนะครับก็จะเป็นช่วงที่ค่อนข้างที่จะมีดีมานด์ค่อนข้างต่ำนะครับเนื่องจากมีวันหยุดค่อนข้างยาวนะครับโดยเฉพาะในช่วงคริสต์มาสและปีใหม่ Thank you. Next question, please.
The next question is, does the recession in Europe have any effect? So as we have been saying in past that we are in a sort of recession-proof industry. People, all our products go into consumer staple requirements like food and health and hygiene segment. So we don't expect any impact on the real demand as far as recession is concerned for flexible packaging segment. On the other hand, the industrial segments are definitely impacted by recession, and we have a very diverse portfolio as far as the industrial segments are concerned. So we don't see a big risk there. It may so happen that we may have to place some volumes in lower margin segments for industrial goods. However, we don't see much of risk there. One point to state here is within industrial segment, it is not that it's everywhere the demand is going to be impacted. Solar energy and EV segment continues to grow strongly. despite the fears around recession. And we feel that these segments will continue to grow in terms of demand over next 2 to 3 years.
สำหรับนะครับคำถามต่อไปว่าทางด้านของภาวะเศรษฐกิจตกต่ำในยุโรปนั้นจะมีผลกระทบกับทางด้านของนะครับธุรกิจของเราหรือไม่นะครับธุรกิจของเราได้มีการพิสูจน์แล้วนะครับว่าสามารถทนต่อสภาพของทางด้านของภาวะเศรษฐกิจหดตัวได้เป็นอย่างดีนะครับเนื่องจากผลิตภัณฑ์ของเรานะครับเป็นผลิตภัณฑ์ที่เกี่ยวข้องกับทางด้านของผู้บริโภคนะครับไม่ว่าจะเป็นบรรจุภัณฑ์ที่ใช้ในการนะครับทางด้านของใช้กับทางด้านของใส่ทางด้านของอาหารนะครับรวมทั้งทางด้านของผลิตภัณฑ์แพคเกจจิ้งสำหรับแอปพลิเคชันอื่นๆและเราก็นะครับมีการลงทุนทางด้านของพอร์ตโฟลิโอของเรานั้นมีความหลากหลายวอลลุ่มนะครับก็คือว่าจะต้องมีความมุ่งเน้นในเรื่องของวอลลุ่มของผลิตภัณฑ์ที่สูงขึ้นนะครับภายใต้ทางด้านของตัวประสงค์นะครับซึ่งอาจจะได้รับความกดดันแต่อย่างไรก็แล้วแต่นะครับภาคส่วนนะครับที่ยังคงมีการเติบโตในช่วงนี้แม้ว่าเศรษฐกิจจะมีการหดตัวนะครับก็คือภาคทางด้านของพลังงานนะครับแสงอาทิตย์แล้วก็ภาคทางด้านของนะครับทางด้านของยานยนต์ไฟฟ้านั่นเองครับขอบคุณครับ next question please.
Okay, so does PTL have any effects on carbon credit charge? Not to our knowledge that we have any effect of carbon credit charge. Ashutosh, Suprita, are you aware of any such impact on Polyplex?
No material change, no impact, I guess.
คำถามต่อไปนะครับก็คือบริษัทของเรานะครับมีผลอย่างไรในเรื่องของคาร์บอนเครดิตชาร์จนะครับทางด้านของบริษัทของเรานะครับก็คือว่าไม่ได้มีผลนะครับใดๆในเรื่องของทางด้านของคาร์บอนเครดิตชาร์จนะครับตราบเท่าที่ทางด้านของฝ่ายบริหารนะครับรับทราบไม่มีครับขอบคุณครับ next question please.
On impact of high inflation and tight labor market, does it have any impact on our project in the US? So we have already stated that we had increase in our project cost due to inflationary pressures in the US and also a delay of around 6 months, which we have already stated. But we don't foresee any further delay in the project or any meaningful increase in the project cost anymore.
ก็ทางด้านของนะครับคำถามต่อไปก็คือว่าภาวะเงินเฟ้อที่สูงนะครับแล้วก็ทางด้านของตลาดแรงงานนะครับที่ค่อนข้างจะมีความตึงตัวทีเดียวจะมีผลอย่างไรในเรื่องของโครงการใหม่ๆของเราในสหรัฐอเมริกาหรือไม่นะครับทางด้านของท่านผู้บริหารได้ตอบไปแล้วนะครับว่าไม่มีผลนะครับใดๆกับทางด้านของโครงการใหม่ของเราในสหรัฐอเมริกาอีกแล้วครับ Thank you. Next question please.
Okay. How does the management expect the company's performance for this quarter? As I stated earlier in my response to the first question, that given the impact of seasonality, this is the weakest quarter due to holidays around the world for Christmas and New Year. The impact of destocking that we are witnessing and startup of a few lines in China and India, we expect the margins to be compressed in this quarter. However, Jan to March is a very strong quarter, but for Chinese New Year, so we would expect a recovery in margins and demand in Jan to March quarter.
สำหรับนะครับคำถามต่อไปก็คือทางด้านของฝ่ายบริหารคาดการณ์ว่าผลประกอบการในไตรมาสนี้ของบริษัทจะเป็นอย่างไรนะครับอย่างที่ได้เรียนให้ทราบนะครับในไตรมาสนี้นะครับมีช่วงของวันหยุดนะครับยาวหลายช่วงนะครับช่วงคริสต์มาสช่วงปีใหม่นะครับและก็ผลของทางด้านของ seasonality นี่เองก็จะมีผลกับเรานะครับรวมทั้งเรามีการเริ่มต้นนะครับทางด้านของสายการผลิตอยู่บ้างนะครับในประเทศจีนและก็ทางด้านของอินเดียเพราะฉะนั้นทางด้าน margin ของเราก็อาจจะนะครับก็ได้รับความกดดันอยู่บ้างแต่ว่าในช่วงของไตรมาสต่อไปนะครับทางด้านของ margin ของเราก็น่าจะอยู่ในระดับที่ดีทีเดียวนะครับก็โดยเฉพาะในช่วงของตรุษจีนครับ And that's another question about the presentation and this is just for the knowledge of the investor and he or she would like to know why you presenting about the capacity utilization. Why do you separate the global capacity and excluding China? How important is it to present the capacity utilization of the global level and exclude China? Thank you.
Okay, so it's a very good question. Why, first of all, why are we presenting the capacity utilization for the company? What we need to highlight is, given our strong positioning globally, our sales and distribution network that we have globally, we ensure that our lines are never stopped for want of orders, and it becomes all the more important when the markets are weak. And as Suprita presented in one of the slides, the gap in the margin between the Chinese producers and Polyplex, while the industry is going passing through the trough. So that's to highlight the strength of the company to provide stability to the margins through the industry volatility. So that's the reason why we are presenting the Polyplex CUF versus industry CUF. Now, why do we talk about industry CUF less China? Because most of the Chinese capacities are targeting Chinese domestic market. If we compare the Chinese exports versus the capacity or versus actual production, they are less than 5%, probably even lower. Chinese products invite a strong duty regime in the US, in South America, in Indonesia, where Polyplex has an investment. There is a duty protection against China. In Europe, due to language barriers and the approach of manufacturers in China, we see hardly any presence of Chinese producers in Europe, which is quite a large market. So if we see the major demand centers for our product, in US, they are locked out. Chinese producers are locked out because of large duty incidents. In Europe, they are not there for the reasons that I mentioned. In India, obviously, there's a large domestic market, but sufficient capacities within the market. In Southeast Asia, the largest market is Indonesia, where they are locked out due to duties. So they have a very little export market available to them. And only impact they have on the market in Southeast Asia or Asia Pacific less India would be that they would set the floor price and probably cap the margins. But beyond that, they have no impact whatsoever.
ก็ทางด้านของนะครับก็คือว่าเหตุผลที่เราต้องมีการยกเว้นจีนออกนะครับเนื่องจากว่าถ้าเราดูนะครับกำลังการผลิตของในจีนส่วนใหญ่นั้นมุ่งเน้นนะครับเพื่อตอบสนองกับทางด้านของความต้องการภายในประเทศเท่านั้นนะครับมีการส่งออกนั้นค่อนข้างน้อยตลาดในสหรัฐอเมริกานะครับก็มีการล็อกเอาท์ทางด้านของก็คือการส่งออกจากจีนนะครับเนื่องจากทางด้านของนะครับทางด้านของกำแพงภาษีที่ค่อนข้างสูงนะครับในยุโรปก็เช่นเดียวกันในอินโดนีเซียซึ่งเป็นตลาดที่ใหญ่ที่สุดนะครับในภูมิภาคอาเซียนนี้นะครับทางด้านของในเรื่องของกำแพงภาษีก็เป็นอุปสรรคนะครับกับผลิตภัณฑ์ของจีนที่จะนำเข้านะครับเช่นเดียวกันเพราะฉะนั้นเวลาที่นำเสนอนะครับทางด้านของกำลังการผลิตจึงมีการแยกนะครับในระดับทั่วโลกนะครับกับจีนครับ Thank you. That is all the questions that we have at the moment. Now that is the fourth statement, and this is not a question, but it's a kind of compliment that this investor, he or she would like to applaud the management that can control and can make the company perform very well, and that's also a kind of a small question. Is there a opportunity that the parent company from India will buy back the stock from PTL and something like whole PTL like a subsidiary for 100%, so that because the PTL in Thailand have such a very strong performance. Thank you.
So first of all, I would like to thank the investor and all of the investors for having the trust and faith and confidence in the company. A big thank you for the kind words of appreciation. I would like Ashutosh to respond to the question around buyback.
So I guess there's nothing on the plate, no discussion about such thing. So we are very happy with the way it is, and the company keeps on performing. So no plans as such, I guess. Chupita, you want to add on anything?
Yeah, I mean, as Ashutosh mentioned, there are no immediate plans for any buyback. So if that's the question, if the company has any plans of a buyback, there is nothing that we are aware of, at least in the next 3 to 6 months.
But we will definitely convey the comments of the investor to the management in India.
ขอบคุณมากนะครับก็คือในอนาคตอันใกล้นี้นะครับทางด้านของนะครับผู้บริหารก็ไม่ทราบนะครับก็คือนะครับยังไม่ทราบใดๆในเรื่องของว่าทางด้านของไม่เชื่อว่าทางด้านของบริษัทแม่จากอินเดียจะมีนโยบายในการซื้อหุ้นคืนนะครับแล้วก็ขอบคุณมากนะครับสำหรับทางด้านของนะครับทางด้านคำชมของทางด้านของท่านนักลงทุนก็จะนำเสนอนะครับคำชื่นชมนี้ให้กับทางด้านของทีมผู้บริหารกับบริษัทแม่ในอินเดียด้วยครับขอบคุณมากครับ
I want to make one statement is that because there were so many questions around the performance and going forward. So one thing I can say is given the strong positioning of the group, continued investment in not only base film capacity but also value add businesses. Polyplex in times to come will continue to outperform the industry and even more so as the industry passes through its stuff. This is something that's for sure.
ก็อีกเรื่องหนึ่งนะครับที่ทางด้านของทีมผู้บริหารอยากจะขอเพิ่มเติมนะครับเนื่องจากในเรื่องของการมุ่งเน้นนะครับในเรื่องของการใช้กำลังการผลิตของเราอย่างมีประสิทธิภาพเต็มที่นะครับมุ่งเน้นในเรื่องของการที่จะมีการผลิตนะครับผลิตภัณฑ์ที่จะมีการสร้างมูลค่าเพิ่มนะครับนั่นเป็นทางด้านของจุดยืนที่สำคัญของบริษัทนะครับในการที่จะมีการดำเนินการต่อขึ้นเพื่อให้ผลประกอบการนั้นนะครับอยู่ในระดับที่ดีอยู่นะครับตลอดเวลาที่สามารถทำได้ขอบคุณมากครับ
On the next question, do reducing freight rates affect our margin? So just to highlight that the high freight rates were impacting primarily the European and American markets. So it does obviously impact the pricing of our product, but at the same time, it also reduces the cost of our raw material. So there will be definitely a downward impact on the margin, but not very significant.
ก็ในเรื่องของอัตราค่าขนส่งนะครับมีผลกระทบกับทางด้านของmarginของเราหรือไม่นะครับก็คือว่าผลกระทบไม่มีนัยสำคัญนะครับแน่นอนว่าทางด้านของอัตราค่าขนส่งต่างๆเหล่านี้นะครับที่ลดลงนั้นก็มีผลนะครับหลักๆแล้วกับทางด้านของตลาดในยุโรปกับตลาดในสหรัฐอเมริกานะครับมีผลกับทางด้านของราคาของผลิตภัณฑ์ของเรานะครับและก็แน่นอนนะครับส่งผลกับทางด้านของต้นทุนของวัตถุดิบของเราด้วยครับขอบคุณครับ These are all the questions that we have right now. Thank you. Would the management team like to add anything else, please?
No, nothing from my side. We can respond to any more questions that may be there from the investors.
I think we have about another 7 minutes left, so we can maybe give a couple of more minutes for investors to post any additional queries they may like to check with the management.
ถ้าท่านผู้ถือหุ้นนะครับก็ต้องการที่จะนะครับส่งคำถามมายินดีนะครับส่งเข้ามาได้เป็นภาษาไทยหรือภาษาอังกฤษก็ได้นะครับเรายังมีเวลาเหลือของเรานะครับในวันนี้ครับเชิญนะครับ One more question, please.
Yeah, I think there is a comment that the management should consider doing more PR about performance. So thank you for the feedback, and we will definitely consider it positively. Thank you.
ขอบคุณมากนะครับทางด้านของก็คือคำแนะนำนะครับแน่นอนว่าทางด้านของฝ่ายทีมผู้บริหารจะพิจารณานะครับในการทำกิจกรรมประชาสัมพันธ์มากขึ้นนะครับเกี่ยวข้องกับผลประกอบการของบริษัทครับขอบคุณมากครับ
I think if there are no more questions, we can end the session. Thank you everyone for your participation and patient listening.
Thank you. ขอบคุณครับ
Thank you.
สวัสดีค่ะ
ขอบคุณมากครับสวัสดีครับ